All right, guys and gals, back to work. I know weekend is over, always flies right by. That's right, charts look fantastic tonight. Let's make some money this final full week of the month of July. Now, boy, there are two big clues I see right now. One on the 60-minute and another big clue on the faster tick charts. You put those two clues together and the roadmap to make money tomorrow and the rest of the week is pretty straightforward. In the video tonight, I'm going to cover my favorite trades this video tonight that you guys have roadmapped to make some money as well. Now, before we jump in into my favorite trades for Tuesday, make sure you subscribe to our channel. You don't want to miss tomorrow night's video, so make sure you subscribe. And if you enjoy these videos, if you like these lessons, hit that like button, will ya? And give me a shout out, give me a heck yeah in the comment section below. Thank you guys so much for tuning in, supporting our channel. Enough of the intro though, let's go make some money on what should be a very good day tomorrow on Tuesday morning. Now, charts are already, as you can see here, Nasdaq, triple Qs are already. Oh, the E-mini and the SPY is ready. As I mentioned earlier, I have two, I think, very important clues here that are really kind of giving us a pretty easy roadmap to make some money tomorrow and possibly the rest of the week this week. One of those clues is right here on these 60-minute, these hourly time frames. Now, we've been bullish for a long time, but last week, we saw this big sharp move going lower last week on the S&P and the Nasdaq, probably just profit taking ahead of a big earnings report we have. We'll talk about that a bit later on in the video. Now, whenever we have an overall bull market like this and a very strong move down, we have to expect the sellers are going to try to retest that low before they resume their overall bullish trend, right? So strong run down. We assume sellers are going to try to retest that low before they resume the overall bullish trend. I would love to be a buyer on that double bottom later on in the week. But you know what? We oftentimes, because we're overall bullish on the higher time frames right now, we don't oftentimes get that double bottom. Oftentimes what happens is we wind up getting underneath these prior swings. And this is usually where the money is made in these environments. In other words, bear traps, right? Underneath prior swings. In the free video class, of course, we teach these patterns. They're called bear trap patterns. But again, we expect these sellers are trying to retest that low. And my goal tomorrow, really for the rest of the week here until things change here, is to buy as low as I can, right? Absorb these sellers. Do not chase this thing going higher right now because of all that momentum going lower, but really focus on getting in underneath prior swings, buying nice and low, and ideally buying bear traps here tomorrow and the rest of the week this week. So that is what the 60-minute time frame is telling us. Bear traps are where the money is. Now, bear traps come in lots of shapes and sizes. And of course, I'm not going to trade off a 60-minute chart tomorrow morning in our trade room. I have one, I think, just as important clue on some faster tick charts that will help us time those bear trap entries, because there are lots of ways we can do that. But before we dive into those entries, though, and talk about the faster time frames for tomorrow, let's check our schedule for tomorrow first, because there's two things on my radar that you want to keep in mind as well. The first, of course, is the home sales number coming out at 10 o'clock Eastern time. Anytime we see Red Star News at 10 o'clock Eastern time, you want to be paying attention. We call this the 10 o'clock shock in our trade room. That is kind of the appetizer for tomorrow. The big news tomorrow, you probably know already, but if you don't, tomorrow we really kick earnings season into gear, right? Last week we heard from TSMC, ASML, we heard from Netflix last week, but now we kick this up a couple more notches. We got one big earnings block tomorrow night after the close from Tesla and of course Google or Alphabet. The rest of these I'm not really that worried about. So pretty much the only earnings report we're going to worry about for the week this week is at the closing bell tomorrow afternoon. That means tomorrow afternoon, be careful into the close. And we'll come back tomorrow. We'll talk a lot more about how to trade the reaction to earnings in tomorrow night's video. So keep that in mind. Home sales at 10 o'clock Eastern time. Think about that 10 o'clock shock. And again, tomorrow night, don't miss tomorrow night's video. We'll talk more about how to make money as earnings season rolls on here. Now, back to our charts though, because as I mentioned earlier, I like to use these 60-minute time frames to kind of give us the big overall, bigger picture. But remember, the 60-minute charts are not that great for timing the entries. Tick charts, you see, tick charts, I do a lot of pattern trading in our trade room, right? I'm a pattern trader. I use entry patterns, and tick charts make entry patterns a whole lot easier to spot in the charts. This is a 7,000 tick chart. We use tick charts in our trade room, and if you're watching for the first time right now, this is the only indicator you need. It's the 21 EMA. Lots of ways in which I'll show you guys how to use that 21 EMA for some bear traps and find lots of winning trades each week with us in our trade room. Now, there's one really, really big clue on this tick chart, and that is that bull run up into this trading range. Now, ranges. The two things you want to think about when it comes to ranges is that, first of all, ranges act like magnets, and they love to rotate up, down, up, down, up, and then down. Now, in situations like this, I'm looking for bear traps to buy below that low, looking for bull traps, right, to sell off of that high. And because this is a bullish move into a trading range, oftentimes these will break out and then pull back. So you can see there's plenty of ways to make money on this. Later on in the video tonight, I want to talk about that breakout pullback. I'm going to talk about some bull traps to short off the high. My favorite trade for tomorrow, as I mentioned earlier, was to buy bear traps because we saw on the 60-minute chart. So if we know that ranges love to rotate, my favorite trade for tomorrow is let's get down here and find some bear traps here. Now, there are four. I know there's a lot of different variations about bear traps. For example, my favorite way to do this is I'd love to get down into key support levels, swing support, triangle support, even channel support. I would love to get down into that area down here. And remember, I'm not going to pick a bottom, right? My crystal ball doesn't work very well anymore. I'm not going to blindly buy down here. What I'll do is I'm going to look for what I call a failure pattern into trap combination. There's a great failure pattern right there. So I want to buy down here underneath that trading range, right? To do that, I'm going to let the sellers come in and try a couple times to short this thing. The reason why I like to use this technique is because now, once those bears are trapped in, again, bear trap, I can then use their stop losses to fuel that move going higher. Now, oftentimes, these failure patterns, we call them, they will turn into what is technically a bear trap combination. Bear traps are very, very simple. One begins with a pop-up and a separation away from that 21 EMA. Second is a higher high in price. And third, I want to get underneath that prior swing. I want to see a strong green candle closing above that 21 EMA. And again, that would be a technical bear trap pattern. Again, you'll notice a failure pattern back here, right? We roll lower, bears once, bears twice. We squeeze that sucker back up. So again, I'd like to be buying underneath that low, trapping those bears, use that failure pattern, right? That failure pattern we teach in the video course, and then get that separation, right, off the moving average, higher high in price, and that trap combination. Now, that is kind of like the bread and butter trade. Let's talk about some variations of this, because oftentimes we get these much deeper pullbacks. I oftentimes will get something like this where it'll pull back, I'll get a failure pattern, one try, two try, trap the bears in with a failure pattern. And we'll talk about this more as we go, ranges, they love to break out pullback, right? Breakout pullback. I oftentimes will get my first profit target hit. I'll get my stop moved up to my point of entry. It's a winning trade, but we don't get that completion running higher. We don't get that rotation back higher again, and we wind up going for another leg going lower. Now, in an overall bull market like this, I love to buy double bottom retests. And they're basically, I think these are kind of a gift from the trading gods, because now let's do it again. Let's now rope in those bears, because this is not a good spot to be selling, not at support, below a range overall here right now. Trap those bears in with one try, let them try two tries, use that same failure, look for that separation off the moving average, shallow pullback, doesn't pull back to the 21 EMA. It's a higher high in price and a trap right below that low. Failure into trap combination. It could be a double bottom as well as we reload again to go back up into that range. Now, let's slow down for a second, because I know that most of you guys and gals watching right now, you know these patterns already. I get so many emails from you guys every week. I know most of you guys know these, you're making money with these, but if you're here for the first time right now, if you're watching for the first time right now, this might be a brand new language for you. How do ranges work? What are failures? What are traps? Don't you worry. I teach this entire strategy, and I have hundreds of examples of failures and traps and a whole lot more. I cover the entire roadmap in our free video classes. I'll put a link up top here for you, upper right-hand corner. Don't you worry, upper right-hand corner. Grab that link that popped up there and take that free video course, because the strategy I teach in that short video series will teach you a simple trick we use in our members trade room, so we always know where to find the best winning trades each day. More importantly though, I want to help you start making money out there and time better entries. I'll teach you 4 my favorite entry patterns: failures, traps, strength trades. You'll learn a whole roadmap. It's all linked up top there, upper right-hand corner. Guys, the markets are so good right now. If you're not making consistent money every day, if you're still missing the best trade, if you've still been qualified for a funded account at Apex or Top Step, hit that link that popped up there. Take that free course, perfect for anyone who is serious about making money in these wild markets. Also, be aware too, if you can't get a link up top there, I'm going to put all the important links tonight, the description of the YouTube video. I'll put our free class links down there. Don't forget too, we trade together every day, 8 o'clock Eastern time, our trade room. I'll put those details, description of the video too. And also too, I post a lot of videos and charts and updates on Twitter or X. If you're on Twitter X, again, I post a lot of updates during the day. Give me a follow, all the details you guys need, the description of that YouTube video. But definitely start first with that free video course, because that will teach you how we find the right areas, how we wait for the pullback. We don't pick the bottoms on this. We trap the bears in, failure, and again, that bear trap combination going higher. And remember, we know that ranges, they love to rotate with these triangles, right? So that will tell you now where the market wants to go. Now, I want to talk about going higher here on the S&P and Nasdaq in a moment. But first though, let's cover 2 more variations, because, you know, you never know what the market will give us tomorrow. And I want to make sure you guys know some variations of this. That way, if we don't get kind of the bread and butter entry, you'll at least have a game plan to make some money on some variations. For example, I love to get that run lower, trap the bears in, and squeeze those stops right back up again. But you know what? Sometimes there are so many buyers down here, the market simply runs lower and just whoop and runs right back up again. Those V bottoms can be very, very difficult on our emotions. Here's what I do whenever I don't get the entry I want down here. If it V bottoms off that low, it almost always begins to grind running higher. That grinding motion will almost always separate off the 21 EMA. Now, if you're anything like I am, when it starts grinding higher, you're going to get anxious to get into that trade because you want to get in down here, right? You're not in yet. What I always do is I don't chase after it. Remember, you do not want to buy high until something changes there on the 60-minute time frame, because you got that big move down from last week. I want to buy low. How do we do that? We mark a trend line off the high. We bring that trend line down and find a channel off of that low. And remember, bear traps are likely where the money is made tomorrow. Find a prior swing, get underneath that prior swing, and this, of course, is where bear traps live. I call this the first test trap. It's the first test of the low of that channel, right? And it's a trap entry below that low. These are almost guaranteed winning trades. Now, sometimes we don't get the trap entry. Sometimes there is no swing right there to use. Sometimes we wind up taking this as a failure pattern below that 21 EMA or a pullback combination. Any of the entry patterns you guys are learning in the free video course right now, traps, failures, pullback combos, any of those can work. First test is the best test off the low of that channel. And then one more variation of this, and I promise we'll go forward now on the Nasdaq here. One more variation. You'll notice I have a range right there and a range right here. My favorite trade for tomorrow, of course, is the rotation back down to the pendulum swing off the high, right? Support levels down here. However, if we wind up going a bit higher here and then pulling back in a shallow pullback, one thing about ranges is that ranges love to break out pullback, right? They do. The challenge though is that this is not allowing me to buy low, is it? No. In this situation, we're buying relatively high. So can I buy something like this? Even though it's not all the way down around the area where I want it to, I can, but I have to make sure I buy as low as I can. And what's the one entry pattern? And you'll know this if you're taking my free video course right now. There's one entry pattern I always lean on or rely on whenever I'm trying to buy as low as I can. It's always going to be, you guessed it, a bear trap pattern. Now, bear trap patterns are very simple. In this situation, it's bears trying once, it's bears trying twice, it's a higher high in those one try, two try, and a run right below that low. Again, this is a technical bear trap, and the reason why this is so important right here is because we're not buying low, right? We're buying relatively high, and to buy low on this, now I can get a small risk, a big reward, and a bear trap pattern will always be my favorite whenever I'm being forced, right, to buy relatively high. So now we've talked about how to trade this thing on a deep pullback, that failure into pullback combination. We've talked about if it V bottoms off that low, if it happens to double bottom again, those double bottoms are my favorite way to trade these. Those are also oftentimes the most lucrative trade we get of the week here. And we've covered some shallow pullbacks there as well. Now let's talk about if we go higher, because on a range like this, there could be some breakout pullbacks going higher here, and there might also be a bull trap to short off the high. So how do we short the high right now, and how do we trade a breakout pullback? That's a very good question. Let's go to the Nasdaq now here. Nasdaq is feeling lonely over here. Again, it's very easy to think about this 60-minute time frame as being nothing but bearish. But again, we've been pretty bullish for a very, very, very long time here. And so as I mentioned last week, I'm always very hesitant to simply give up on the overall long-term trend just because, and again, in my opinion, we get some big earnings coming out this week and next week. It's summertime trading. Remember, this is probably simply some profit taking after a very, very big run up in the June and July. So again, I definitely agree. We're bearish right now. The sellers are definitely going to try to take out that low. And I love the idea of buying off a double bottom like that, maybe a failure into trap combination we mentioned earlier on the S&P. But I'll tell you right now, in most situations like this, if we can't get that double bottom, you have to be thinking about the bears coming in right now and trying to get underneath these swings. This is likely where the buyers are waiting underneath that swing, and of course off that low as well. So the higher time frame, 60-minute time frame right now tells us it's all about bear traps. If I go over to my tick chart right now, this of course is a 4,000 tick chart. Nasdaq is a bit less volume than the S&P here. If I now look at my tick chart right now, you're going to see a very, very familiar, right? This, of course, same thing here. It's a bull move up into a trading range right there. Again, ranges love to rotate back and forth here right now. I talked about earlier how I have 4 different variations, failures, trap combinations, double bottom reversals. We covered that earlier, of course, on the S&P chart. Nothing is new there on the Nasdaq. But now let's talk about going higher. Let's talk about going higher, because oftentimes what happens is we'll get these, again, it's a bullish range, right? So we're more likely now to rotate and keep going right now. If we keep going higher here, I do not want to chase this thing going higher, right? Because again, that big move down on the 60-minute time frame is going to try to keep shooting this thing right back down again, right? We might run up and get whacked right back down again. So I don't want to chase it going higher. There are two ways I want to buy this if we go higher. One is called, well, basically called a bear trap. If we get something like this, where if we wind up breaking out and getting separation off the moving average. Remember, separation means strength. Separation means strength. When right, for example, back here, right? When I pull back to that moving average, right? That's not very strong. If I don't pull back to the moving average, that tells me that we're very strong. Separation away from the moving average means strength. So on the Nasdaq and the S&P for that matter, if we start popping higher right now and we start seeing these shallow pullbacks, don't pull back all the way, higher high in price, this is where those bear trap entries come in for a move going long. Now, in my experience, usually breakouts like this, the breakout leg creates a measured move, and that will give us a target going higher there for tomorrow. So very simply put, if we start jumping higher here and we start noticing some shallow pullbacks and separating higher, I'm looking for bear traps on the way going higher. This will probably not last forever, right? Usually these will go one leg and two leg. I'll pick some profit targets up around the high and we'll stop buying high. Now, at this point, I want to buy as low as I possibly can. And remember, ranges, they love to break out pullback. Now you want to pay attention right now because this game plan for a breakout pullback is very, very consistent. So pay attention to this one. If I want to buy a pullback, a breakout pullback, the first thing I think of is a two-legged pullback. Now, what's a two-legged pullback? A two-legged pullback is a bit more than a measured move. Think about getting below the moving average, a bit more than a measured move. A bit more than a measured move, right? Measured moves are A, B, C, Ds. So I'm looking for that bear trap on the way up. Once we complete that measured move up here, we stop buying. We don't chase after it. We wait to buy nice and low. When I think about buying nice and low, I think about one leg, two leg, think about a measured move, an A, B, C, D, again, but goes too far. Now, just like back this morning, we're not going to pick the bottom on this, right? I'm not going to blindly buy that pullback. For all I know, it'll get crushed and run back down again. And if it does, by the way, 1, 2, failure into trap combination, right? If it does run lower, it's that same camp we talked about earlier on the S&P. However, what I would like to do is once this thing starts pulling back a bit more than a measured move, now we wait for, just like over here, right? We trap those bears in, one try for the bears, two try for the bears. Why two tries? Because I want those stops, right? I want that. My first coach, my first mentor would always say, Joe, think about where your pain is, right? Think about where the sellers, the rookie sellers, have their stop losses, right? Buy right into those stops. That is a failure pattern, of course. We teach that stuff in the free video classes. Then don't forget, right? This thing now, as we go higher, look for that separation off the moving average, that higher high in price, and again, trap patterns are the name of the game. Why? Because traps are going to get us in to buy as low as possible. Now, markets are fractal, right? Which means I can take these two legs, combine them into one big leg, right? Pin that down there, take these two legs, combine to one big leg, and that creates a measured move from there. Anytime we see breakouts or ranges like this, you want to think about breakout leg is the measuring leg, right? So again, this is the sequence I always look for whenever I have a range breakout that goes with the overall direction. It's a shallow pullback trap. Take that profit off at that measured move. Now wait for 1, 2. Don't pick the bottom, right? Like back over here, don't pick the bottom. Look for the bears trying once, try twice. Trap those bears in with a failure pattern. Then as we go higher, it's a technical bear trap pattern. Separate off the moving average, higher high in price, and go from there. Now, one last variation of this. Not my favorite trade for tomorrow, but we'll see if we get it again. Remember, my goal tonight is get us a game plan that no matter what we get, you are ready to make some profit. I mentioned earlier that range right there, I can measure below, measure above. We get quite a bit of resistance up overhead. So there's always a possibility we may run up and just get whacked right back down again. Now, I'm not a big fan of picking tops in a bullish market in a range like this. It's very difficult to pick that top consistently well. What I'll do tomorrow is look for what we call a V top reversal. If we run up and we get whacked back down again, if we start to grind going lower like this, remember the grinding motion is always the giveaway. Remember, this range right here is going to want to rotate back down roughly about the amount we went above, right? We'll put that down there. That becomes the objective, right? It wants to rotate back and forth like that. So if we wind up going higher here, if we wind up going higher, but now the bears come in and just crush this thing back down again, what'll usually happen is it'll get back below that moving average and begin to grind going lower. This is your giveaway now, right? Now you know that grinding motion says mark a trend line off the highs, bring that trend line up, so off the lows, bring that trend off the highs now, look left, and again, what you want to do is you want to find one of those swings. This is where the money is, right? Is where it's, again, it's the first touch, right? The first test is the best test off top of that channel, right? The first touch of that channel, and it's above a prior swing. That's where traps live. Oftentimes we go above the moving average. That's where failure patterns live. Failures turn into pullback combinations, right? And that run back down. It's all part of the price action cycle. And again, you'll be speaking this language too once you get to the video course I mentioned before, linked up upper right hand corner in the description. So that V top, right? That V top reversal there. Again, if it runs up, right, and gets whacked back down, find that new channel this way, off that high that way, right? Mark off those highs there. And again, first test is the best test. Any of the entry patterns you guys are learning in the free video course. And again, I have hundreds of examples inside that video class I mentioned earlier. All right, guys, that is the game plan for tomorrow. Now, don't forget, tomorrow morning, 8 o'clock Eastern time, come trade this stuff with us, guys. The markets are wild. There's a lot to learn as a new trader. The easiest way to start making money in these wild markets is to come out and learn this and trade along every morning in our trade room. Again, I'm going to put all the important links tonight. I'll put our free class links down there, our trade room membership links down there. Start first, of course, with the free video series. Learn the roadmap, start making money on your own, and hopefully sometime soon I'll see you trading with us in the morning trade room at 8 o'clock Eastern time. Right, guys? Hope you learned a bunch in the video tonight. Hope you use this knowledge to make a bunch tomorrow. In the meantime, be well, be nice to each other out there, and be here next time. Adios, amigos. Bye for now.